Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Good morning, everybody. Welcome to the Friday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you guys all had an amazing trading day yesterday, as we're going to do what we do each and every day, identifying potential breakouts and reversals from an educational perspective. So let's go ahead and get started. Real quick announcement for those of you that trade futures. We're going to be having a futures webinar on the 14th. So many people have been asking for a little bit more insight in some of the basics of trading futures. So the 14th of August, 7 p.m. Central, go to tradersarmy.com/registration to register today. All right, let's go ahead and dive right in. So the ES this morning, we're down 19, but yesterday we had a really nice move off of our breakout trade from the live trading room. So those of you that were in our live trade room, we set this position up and it wound up hitting both target 1 as well as target 2. And then we came up into our next supply area. Now, depending on how tight you are with your stop or whether you wanted to take this one or not, this one did pop through a little bit after. But looking at this from that perspective, it's started to kind of come down. So you may or may not have had your stop, at this level. Better to have it above the pivot typically. And so now, as we're kind of coming back down, let me remove this level. So this trade worked out for a really nice move. Leave me some information in the comments below if you're able to catch any of this breakout trade. This was a pretty clean breakout from the style that we typically teach. We had a gap right here actually during the in between the sessions, and we don't normally have gaps in these futures markets, but we did have a gap in between the section of a few points, and so that does set up a potential gap fill trade. Right now, we still haven't traded lower than the first candle's low. Right, so this gap down is a gap down. I think that the next most obvious opportunity would come in down here at where we began to rip up yesterday. So if you want to go to like a 15-minute chart, theoretically you could, we've got a little bit of a demand right here that we bounced off of once, and now we're basing in front of it again. So realistically, you could take a short below here if you were so inclined, as we are kind of basing inside that region. You could theoretically take a short below that level. Now on a 4-hour chart, now that we have put in these last couple of higher swing highs, higher swing lows, we've changed our big picture trend direction. So the better trade is the pullback into one of these regions down here in order to get long. The Nasdaq also reached both target 1 and target 2 from its breakout long. So now looking at the same kind of area and same level, it would be this area here as the origin of that breakout long. Nasdaq is actually coming down a little bit more than the S&P. It's performing a little bit worse. It did not reach the supply level that we had identified as the target when it came back into here. However, it came really close, and so now we need to switch this to a confirmation entry. Okay. Next, crude oil. So crude oil, in the class, we had identified a potential for a little reversal off of this area, and took the short actually right here in the class while we were teaching, with our stop up above here. So it didn't really give us much hope, but one of the things that I saw very early were these two tweezer bottoms, if you will, and those two tweezer bottoms told me that there was a fair amount of buying pressure. This is why we tell everybody to use the trade updates. So the trade update, in our trade update, we talked very early about the fact that CL turned lower and has not yet hit the stop place in class. It's still currently sitting with some bullish action. The bullish candle action made it a good time to move the stop to break even, and that's why we move that stop to break even, because of the bullish candle action. So that bullish candle action was was those two bottom wicks that we had right into there. Even though we entered the short on this green candle here, and which made sense, right? The big picture is overall, was overall bearish. That's a good entry point. However, it just didn't hold to fruition. Okay, and so those are okay. You're going to miss out on some of those positions, and it's okay when that happens. Now, interestingly enough, this is an opportunity when old supply acted as new demand, and we got a very strong rally away from that area. Now we've come into our next little area of supply, but I've got a fair price value area right here. So if you took that, your target is very close. And so now I need to remove this one as well. But your T1 is very close. It's almost a 1-to-1 on the target 1 setup. So we are rallying a little bit this morning, up about 50 cents in oil, potentially setting up for a pullback in this region as a chance to get long. So if you took the short up here, I would be very close to taking profits somewhere in there. And then this, if you're so inclined, I think you can get a long out of here to take the next leg higher. Gold, we have no reason to short gold. There's no reason to look at gold as a short. We do have this potential area here that we're setting up for a potential breakout right through there. So getting above that high does give you room to run. If you're a really smaller time frame trader, you can take a break down below this area here. This is for much smaller day trade style traders. Looking at our bonds and currency markets. So the ZN, we keep coming back down to this area and just are unable to pop through it with any strength. Yesterday we came really close to it, and so we're still kind of above that region where we're putting in. This looks like a little mountain range that we're creating right here, and that mountain range, once it falls below, typically has room to drop. In the Aussie, we came up to the Aussies as a potential breakout area. This is where we were looking at it yesterday in the class, and talked about if we base below here. So I think we could get a breakout above here inside of this Aussie position. The Euro, we actually drew these lines yesterday and stayed in between them. So nothing really has changed in the Euro for a potential breakdown from here. Now, looking at this on a 4-hour time period, you can see that we are, we've put in this this long triangle pattern in the context of a bigger picture downtrend. If I go to like a daily, it's in the context of a bigger picture downtrend. And notice all of the candles have been inside of one another. Every one has been an inside day. So since every one of those candles has been an inside day, once we move, we're going to move. And it typically has a pretty big follow through. Our Canadian dollar, we had our breakout in the Canadian dollar as price broke out above this level here. That was another trade that we had looked at inside of the live trade room. Took our stop and managed it and moved it up to this area here. So if you've taken your stop, move it up to that area there. We are coming into a supply area, but on a 4-hour, that looks like a potential for a reversal point in here. Now, I'm not a huge fan of the fact that we're basing in front of the level, right? Basing in front of the level right here. And so somebody, and I've had this question before, Chuck, when you talk about basing before the level, what is too close? We'll make it real simple. If I were to get long right here, this is my risk. Well, if I measure the distance to my opposing level, here's my opposing level, right? We've got to drop a little bit of basing, and now we're moving up. So this is basing in front of the level at a 1-to-1 reward to risk. If I've got a 1-to-1 reward to risk, that's going to be too much basing before the level. Now, if you are so obliged, you can still take it as a confirmation entry because of the fact that we're in a bigger picture downward trend. All right. Last but certainly not least, Great British Pound, Japanese Yen. So the pound, we finally have gotten a breakdown from this. I mean, this has just been a week of nothingness. we finally have a bit of a breakdown. But since we were in the nothing for so long, there was no reason to take that breakdown. So now you could have a reversal somewhere up into here. If I move this to a 15-minute, a little bit clearer picture, yeah, right here around the European market open, I think is the place to look. If you want to be a little bit more discerning in your level, I think you could take just this area right here. Actually, you know what? I'm going to change that up. I'm going to go a little bit even more discerning and take just this area right here. And the reason I'm doing this is because of this long wick, right? This long wick means that we had a drop. We came all the way back to here. We rallied up. We turned around and dropped again. Now, this could be argued as a retracement of this area here to the left. And so because of that, it's a little bit higher risk. But I think that would be where you'd look for that one. And then in the Japanese yen, we are building a case for a breakout setup. It's just not quite there as of yet. So it is a Friday. Remember our rules on Fridays. If you decide you want to hold a futures contract over the weekend, then you definitely want to understand the risks that you take in holding that futures contract. And if you don't completely feel like you understand the risks of futures, join us Thursday the 14th for our futures webinar. We're going to call it Trading the Tweets. How to beat the tweets. So go to tradersarmy.com/registration to sign up for that webinar today, and I will see you all next week. Hope you guys have a good day.